The last few days, or rather the last few weeks, we have seen quite a correction come by in industrial metals, owing to the fact, of course, that China now is cracking down on this massive price increase that we are witnessing. Aluminum, copper, and of course even the ferrous space, which actually started cracking way before we had the other base metals falling in pricing. Now that has in turn led to a crack in metal stocks as well. So Tata Steel, JSW Steel, many of them have seen a correction. A few weeks ago, we had some of those, cautious stance reports pouring in. Credit Suisse, Morgan Stanley, all of them said that, look, maybe the steel cycle now is showing some signs of slowing down. So there is a possibility that we will see prices plateauing, and that in turn will lead to metal stocks as well plateauing. Some of them in fact even downgraded their stance on many of these stocks, but CLSA has continued to maintain their buy stance, and they maintain their target price at 1,362 rupees per share. Now the focus according to them is very sharply on cash generation, cost savings and growth. I think that's been adequately witnessed even in FY21, where we saw this massive savings in FCF, thanks to, of course, the fact that we did see a surge in steel prices. And this strong FCF generation, CLSA notes, has driven down leverage quite significantly, and that lower leverage has in turn led to a massive improvement in the return ratios as well. The cash flow pressures have obviously, as a result of all of this, as a result of the strong upcycle in steel prices, have eased quite significantly. Though the one point of concern for CLSA when it comes to Tata Steel is rising carbon credit costs. This is something that we had seen come by even in the second quarter of FY20, in the fourth quarter rather of FY21. But so this, according to them, remains a medium-term concern. But otherwise, they say they note the fact that now that the balance sheet concerns have largely ebbed, we've seen a massive deleveraging drive as well. So now the focus seems to be back on growth. Remember that again in the fourth quarter, Tata Steel had announced that, look, they are once again looking to get going with their Kalinganagar expansion project. So, growth capex is once again back on track. Deleveraging as well will be, right up there in terms of priorities. But now along with that, it's growth capex as well. And CLSA goes on to say that Tata Steel seems to be well positioned in the current cycle that we are seeing when it comes to steel, and hence they reiterate a buy on this steel stock, particularly Tata Steel. Their target price for Tata Steel is at roughly about 1,362 rupees per share. So they are perhaps looking at almost 200 rupees more upside from the current levels.